What's going on, everybody? In this video, I'm going to show you exactly how to be profitable despite maybe losing more trades than you're winning. So if you're someone who wants to really increase your profitability and you might be newer, one of the most important things to consider is what we call R. Now, R is essentially your defined risk. Let R represent whatever dollar amount, whatever percentage amount you want to risk every single trade. So let's just say, for example, you had a $1,000 trading account. Maybe you've decided that your risk parameters are going to be 1% every trade, which is about $10. In order for us to define and to calculate what your lot size should be every single trade, it's very, very important that you have first defined what R is going to be represented as every single trade. Let's just say we had this point of interest on Euro USD, and we were anticipating for price to trade into this zone and give us a bounce to trade higher. Maybe my entry parameters would look like this, just as an example. My entry is going to be at the open of this point of interest. Stop loss is going to be beneath the low, and my take profit, maybe above these highs. Okay, just as an example. In order for me to calculate my lot size to make sure that I have no more than 1% or $10 risked per trade, there's a couple things that I need to take into consideration. First thing is the amount of pips that my stop loss is, or ultimately just where my entry and exit price are given this particular trade. So the way I'm going to go about doing this to calculate my specific lot size, because realistically with an 18 pip stop loss, my lot size would be different than if I had a 60 pip stop loss. If I'm wanting to risk the same dollar amount every trade, I need to go about this very technically or very calculated in order to make sure that my lot size is going to represent no more than what I've defined as my consistent risk every single trade. So there's one way to do this that I think is personally very quick and easy, and it's using a calculator called cashbackforex.com. Their position size calculator is fantastic. Okay, now there's other calculators out there. The reason that I prefer this one more than any other is because you can properly calculate your lot size on any instrument. Some calculators, they don't let you properly calculate your lot size for gold, for Bitcoin, for US 30, NAS 100, different instruments or different assets that you might look to trade. But for Euro USD, there's a couple different ways to go about it. So you have stop loss in pips, or you can switch to stop loss in price. If you're trading just regular currency pairs, what's probably quickest and most convenient is to put in the actual pips for your stop loss, the pip total for your stop loss. So if I take a look at this, this is an 18.4 pip stop loss. This is a key point. You only want to do this and use this number if it's a currency pair. If it's gold, if it's Bitcoin, if it's something different, you will get a skewed answer, and it's imperative that you just copy and paste entry and stop loss price. And I'll get into that in more detail. But for currency pairs, there's no problem. Quickest, easiest way is probably to just take the stop loss in pips. If you have it on your trading view, if you're taking it from a trade idea, just copy the entry price and stop loss price in here. Okay, if I go to stop loss in pips, I can take a look at this. It's 18.4. So I'm going to put in 18.4 is my stop loss in pips. For the example, we were using a $1,000 account risking 1%. I would encourage you guys to just keep it a static dollar amount. This is how you really capitalize on positive risk to reward ratios and being in a position where you can lose more trades than you're winning and still be profitable. Let's talk about it, okay? So for this, stop loss in pips is 18.4. If I click calculate, it's gonna give me the exact lot size for my position. Don't worry about this units trade size thing. This is not important. You can see the risk at percentage. If I change this to a percentage, right, and we do 1% just to show you guys, it'll show you money at risk and confirm the money at risk here too. But that's the lot size for this particular trade. Now I'm going to go ahead and execute that position with the lot size that I've calculated for myself. Now, if we have a trade with a bigger stop loss, let's say 30 pips, I'm going to want to calculate my risk, and it's going to be different. I'm going to calculate my lot size, and it will be different than the first example. The first example with an 18 pip stop loss, we had a 0.05 as the lot size that was given. This trade, we have 30 pips as the stop loss. When I change this to 30 pips, watch how the lot size also changes. If I'm wanting to be consistent, risking no more than 1% or $10 every single trade, I want to make sure that I'm calculating my lot size before every single trade. It doesn't take a whole lot of time. It might take you a little bit at first, get acquainted with the platform, but guys, this literally will take you a couple of minutes. Okay, a lot of my trade ideas, this is specific to my trade ideas, I will share them in advance, so you're not having to rush to do this all the time. There will be instances that it's like market execution right here, right now, you know, and you might be like frantically like, oh my gosh, like let me try and calculate this and figure this out. It is better to take a 1 to 2 minute, you know, period of time to calculate your lot size and be a little bit late to an entry, but know that your risk is what it's supposed to be, than to jump into a trade without calculating your lot size and then be risking more than you want to be. Hopefully that makes sense. In this example, 30 pip stop loss on Euro USD, 0.03 would be my lot size in order to be risking no more than $10. Here's the beautiful thing about this. If you're calculating your lot size every single trade, you could literally lose this trade. All right, this is a 1 to 5 risk to reward. I say that 1 to 3 is kind of like the bare minimum. Okay, recently we took a trade idea on USD Chef, right? USD CHF, the Swiss franc. And actually, I'll show you guys who wants to be in the video. Only be in the video if you actually took the trade, though. This is a trade idea that I shared on USD CHF just earlier this week. In fact, if you participated in the trade, go ahead and just blow up the chat, because the people that are watching this video are going to see who actually participated in this trade idea live in real time. We're currently on a session as I'm recording this. So go ahead, go crazy if you did participate in this trade. A bunch of people did. We'd love to see it. We'd love to see it. So with this particular trade, okay, a bunch of people participated. This was a 1 to 3 risk to reward. 1 to 3 risk to reward. So we had 15 pips risked to make about 48 pips. Okay, this is just to take profit, like literally on this session. For our risk parameters, okay, what do we have? Right, we had the R equals, you know, $10 or 1%, and we're trading with a $1,000 account. Just as an example, this could be more. Maybe for your account, you decide to risk a little bit more. Maybe it's 2%, 3%. Okay, everybody's, you know, R is going to look slightly different. But the cool thing about this is if, you know, we call it 1R, let R represent whatever your risk is. You're risking 1R to make 3.2, technically 3.2 R on this trade. And so this, you can see risk to reward ratio 3.2. If I risked $10 on this trade, I made $32 on this trade. If we were to take this trade, let's say 5 times, the exact setup, you know, obviously different different market conditions, maybe this is a losing trade. Okay, that means that we would be down, right, -1R, which means with a positive risk to reward ratio like this, I could lose the trade 2-3 times, win it once, and be back at break even, making up for all the losses. A prime example of this literally happening this week is we had this Euro USD sell that ended up being a losing trade. And if you took the time to calculate your risk, you're just down $10 on this losing trade. Okay, this is a 31.8 pip stop loss. Again, you calculate your lot size accordingly using the calculator, but you would be down -1R on that particular trade. Now you jump over to USD CHF. This is another trade idea that I shared. Okay, you guys saw who participated. In winning this trade, not only do you make back the $10 or the 1% or the 1R that you lost on Euro USD, you also just profited 2.2R on the trade, which is twice what you were risking on the position. So now we have 1 win, 1 loss on the week, but we're up 2.2R. We had -1R Euro USD. We had plus 3.2R USD CHF, which is equal to plus 2.2R at the end of the, well, not even the end of the week. This is just, you know, as of today. Today's Thursday. So you could literally 50-50, you have a 50% win rate here. You won 1 trade, you lost 1 trade, and you're up 2.2R. So this is the thing with risk to reward ratios and calculating your risk. This is where the power in this really comes into play. But let's think about it. If you decide to use the same lot size every single trade, here's what happens. Okay, here's the damage that is done if you use the same lot size every single trade. This particular trade was a 15 pip stop loss. All right, 15 pip SL. Maybe someone's made the decision to take, I don't know, let's say 0.10 every single trade, which is 0.01 per $100 on a $1,000 account. For this particular trade, obviously this is a winning trade. We had a 48 pip win on USD CHF. So for this particular trade, they would be making $48. They risked technically $15 to make $48 if they were just taking the static lot size of 0.10. Now, if we jump over to Euro USD, if they were using the same lot size every single trade, 31.8 stop loss, with the same lot size every trade, this actually equates to them losing $31.80, right? Just under $32. So this is the problem with using the static same lot size every single trade, is that every trade is going to be different with your entry and exit parameters. You're gonna have a different stop loss every single trade. So now, instead of us being in profit 2.2 R on the week, which again, you define what that R equals, a certain dollar or percentage amount. In this instance, because technically speaking, they risked like $15 on the first trade, $31 on the next trade. Like the risk that they have, the dollar amount is fluctuating every single time because the stop loss is fluctuating every single time. They're not calculating what R is. It's not static. It's changing all the time. This is one of the reasons that so many people remain unprofitable. It's because the risk is constant. Like they could go through their trading history and they have minus $20, minus $10, minus $5, minus $60, minus $50. It's not consistent. If it was consistent, they could have all those losses be a certain dollar amount and still be winning and profitable if they were using proper risk to reward and if they were calculating the lot size every single trade. Hopefully this is putting into perspective the importance of doing this. If you took the loss on Euro USD and you were just using a static lot size, but you took the win on USD Chef, which was a 1 to 3 risk to reward, but you were just using the same static lot size, you're playing yourself. Literally, this is what it should have been if you calculated your lot size. This is what it would have been if you just used the same lot size every trade. Take it from me, it's much, much better to calculate your lot size, to be on the right side of risk to reward and have that playing out for you instead of just 0.01 per $100 every single trade. You could do it. Maybe it works for you. But from my experience, this is what will put you in a position to literally lose more trades than you're winning and still be profitable. I'm going to show you guys how to use this calculator with gold real quick. So I have my entry at the start of this point of interest, stop loss kind of beneath the low, and whatever my target is. Doesn't really matter. Okay. Well, it does matter, right? Risk to reward ratio matters. But for calculating your lot size, take profit doesn't matter. Only entry and exit price. Now, if I hover over this, the stop loss number that it's giving me is 786. For some brokers, this will be 786 pips. For other brokers, it might be different. So it's very important when calculating your lot size on gold. You're going to take the entry price and the stop loss price. You're going to jump over to our position size calculator. What I'm going to do is go to instruments. I'm going to type in gold, pull this up. So far, so good. Nothing's different from before. All I'm going to do is copy and paste my stop loss and entry parameters. This is our stop loss for this example. Here's our entry. I have a $1,000 account risking $10 a trade, which I know is 1%. I'm going to click calculate. It's going to give me a question mark. My lot size, not this. This is not your lot size. Don't take that. Okay. That is way too big of a lot size for this trade. That is not your lot size. This is your lot size right here. Okay. It's going to give you a question mark. If you're putting in open price, stop loss price, it's going to give you a question mark. When I click that, it's going to ask you to define the contract size. Now, this is dependent on your broker. It's very easy to find. All you're going to do from your trading app is go click, search up gold. If you're on MetaTrader 5, search up gold, click it and choose details. It will show you what your contract size is. So for my particular broker right now, it is 100 on gold. For your broker, it could be different. And so it's very important that you confirm what your contract size is before clicking calculate, because this is going to give me the lot size. Okay, cool. But watch what happens if I change this to 10. So now I'm taking a 0.12. In fact, I might round up because, you can't put 127 on your lot size. You got to maybe round up to 0.13. So it is imperative that you confirm what your contract size is. It's very easy to do from MetaTrader 4, MetaTrader 5, whatever your trading app is. Just click on whatever the instrument is, gold in this case, and go to details. It'll show you your contract size. The same thing can be said with Bitcoin. The same thing can be said with NAS 100, which is NASDAQ, US 30, which is Dow Jones. Guys, hopefully this makes sense, because R is the biggest thing when it comes to trading. Having a static risk percentage or dollar amount every single trade is what will really put you in a profitable winningest position in trading. You will be the winningest trader if you're understanding R and you have both a high win percentage for your trades and good risk to reward for your trades. So for those of you that don't know, we track everything that we do with trade ideas in economy. So I have this, is my spreadsheet. And the month of January, we had 5 wins, 2 losses, and 1 break even. Okay. Now we had a 71% win rate, which is great. But the R total was 17R. If, and only if, you were calculating your risk every single trade to make sure it's no more or less than what you've defined as R, right? Let R equal $10 or 1% in this example with a $1,000 account. And you took every single one of my trades, the ones that were on Solex, Telegram, live sessions, you would have had 17R that month, which is 17% in this case, because we're risking 1% a trade, which means you made $170 on a $1,000 account. That's pretty good. That's actually really good. Now, if you were risking 2% or 3% a trade, this is doubled or tripled if you're risking 2 or 3% of your live account per trade. I would say 1% is a good place to start if you're new. So I hope this video, helps anybody that's seeing it. Hopefully this helps for you guys that are live. The importance of R and defining your risk and calculating your lot size, because the stop loss will always be different from one trade to the next. At least with my trade ideas and a lot of other educators on the platform. So it's absolutely crucial that you decide for yourself what you want to do. For a lot of you, I think it's probably going to make sense that you implement this. For others, maybe you're like, you know what, I want to keep doing it my way. So for those of you that are on the recording, looking forward to seeing you guys on the inside. I hope you enjoyed this video. If you did, be sure to like, subscribe for more trading content, and comment down below what your biggest takeaway was. And I also wanted to invite you to join our trading community. If you have any questions or you're interested in learning some more about that, go down below to the description of this video. You can read some more about it. If you have any questions about the trading community, be sure to reach out to my Instagram, which I'll go ahead and throw on screen. It's at Donnie Dropout. With that being said, enjoy the rest of your day. See you in some future videos and on the inside. Cheers.